Hello, I'm Linus Sugis, host of the ICS Law Group radio program. My guest today is H.A. Beasley, founder and managing director of H.A. Beasley Company, PC. H.A.'s company is a CPA firm, and the bulk of their practice involves working with closely held business owners on their tax and financial issues. H.A. has agreed to visit today to give advice to business owners who are trying to figure out how to get their taxes filed on time next year. So is it fair to say then that the biggest problem that a business owner faces with filing their taxes on time is a lack of focus? Is that the most common problem?
I think any aspect of compliance with government is an issue for the beginning business owner or the small business operator, whether it's taxes or some other aspect of regulation. And I suppose that it's either a lack of focus or else they're so well focused on what they enjoy doing and what they're good at that they don't know where to start when it comes to addressing these necessary aspects of complying with tax laws.
If they don't comply or if they're late, what are some of the consequences of that?
Well, that's one of the interesting things. There's a lot of popular misconception about income tax compliance, and just talking for a minute solely about federal taxes. There's many issues with state and local as well, but just what everybody's thinking about would, I suppose, be the IRS. With the IRS, the late filing aspect of non-compliance is more expensive than late payment. In actuality, for example, let's say I owe $50,000 worth of taxes because I've had a great year in my business, and I don't know that, of course, because I haven't prepared my taxes yet. But I owe $50,000, and April 15th comes around, and I don't file my extension, I don't file my tax return, I don't send any money, I don't do anything. Well, the most expensive aspect of that is the fact that I didn't file an extension or a return, and the IRS will begin immediately assessing 5% a month up to 25% in 5 months, so that $50,000 is becoming $62,500 just because I didn't send in some paperwork. Meanwhile, the penalty for not paying taxes is dramatically less than that. It's a lot like working with a finance company for the interest and penalties for not paying. And if we can help our clients get used to the idea that they've got to file the paperwork, and then if they can't pay currently, it's like dealing with any other creditor. We've got to, be good with our paperwork and do what the creditor requires so that we can either get a payment plan or demonstrate that we aren't presently able to pay. We found the IRS very willing and able to work with people that are good in communicating with them as they require. So the biggest penalty, to summarize, it hits people for just not doing the paperwork. It may take a business owner to get on his feet. Once he gets behind on his taxes, it might take 2 or 3 years to pay those taxes. But it'll be relatively inexpensive to be late on payment so long as he has not failed to file all the required filings within the...
You mentioned extensions a couple times, H.A., and I think what I heard you say is that the smartest thing for somebody who knows that they're not going to be able to have their taxes done on time is for them to file for an extension. Can you talk a little bit, and you're right, I think most of our listeners will be interested in the IRS. Can you talk a little bit about the extension process?
Yes, sir. Extensions are, quote, automatic. If you look at the extension form, I believe most of the various extension forms we use with the IRS will refer, on the initial filing at least, to an automatic extension. And for most of my lifetime, that was a two-step process. We would file an extension that was good until August 15th, and then we would file again if we wanted one until October 15th. A few years ago, the IRS changed that so that one automatic extension is good until October 15th. It's my understanding that technically the IRS can challenge an extension when the tax is not fully paid, but in my practice, I've never had them do that I can recall. So an extension with the IRS does not require payment to be valid. So in my example of the guy who owed $50,000, if he's our client, we're going to send an extension off for him on April 14, whether we know how much he owes or not. We're going to get that extension ready, and we're going to see that it's registered or certified or otherwise well known to the IRS that he's filed his extension on time. That gives him that additional 6 months to not only determine how much tax he owes if he doesn't know, but since the IRS doesn't know how much he owes yet, they really can't begin the collection process. Filing an extension is also important oftentimes for a business owner who's had a great year and he would like to contribute to, let's say, a SEP IRA plan or some retirement program like that. SEPs are one of the plans where so long as you filed a valid extension, you can make your contribution later in the year. So you can actually do after year-end tax planning through proper use of an extension.
That's great advice. There's some flexibility that's built into the process simply by having somebody file an extension. That's terrific advice.
Dennis, I'd like to add for Tennessee
Sure.
residents that Tennessee is a little bit more narrow-minded when it comes to the extension process. We found that in order to get an approved extension, you've got to pay the appropriate payment along with the extension, and that puts a great deal more pressure on taxpayers, primarily corporation taxpayers, whether C or S corporations, and to some extent LLCs also, because most of those entities have at least $100 or more in Tennessee tax liability. So just to be sure not mislead the client there, that federal extensions are easy. Tennessee extension requires at least some kind of payment if there's going to be a balanced deal, or else the state will just ignore that extension and charge the penalties.